Hi, and welcome to the Market Alert for Tuesday, the 26th of August 2025. So, stock slump amid last week of summer, lull, Bitcoin battered, and black gold was bid. So, oil prices up. Markets pair some of the dovish Powell move with eyes on data. So, switch from Powell's rhetoric from last Friday. US stocks unwound some of last Friday's dovish post, again, which was from Powell. Obviously, he's talking about cutting rates this next month. Latest economic news for today. It's US news, core durable goods orders month on month, and CB consumer confidence and Richmond manufacturing index. So there's enough news there to give the market direction, which I suspect will be sideways to higher. So let's have a catch up, see where we are from the weekend and of course the bank holiday Monday yesterday for the UK, and kick off with the Dow. Well, surprise, surprise, we have a new all-time high for Friday, 45,762. Yesterday we see the market giving back some of these gains with an inside bar, and overnight the market moving lower initially and now finding a bit of support. So you can see there yesterday giving back the gains from the dovish rhetoric from Powell, but moving back on the overnight, having had a bit of a slam down there. Oversold in the 30-minute chart and trying to bounce back to get back above the low there off the S1 number. So again, just stepping back, having a look, market can continue to make new all-time highs for the Dow. No doubts about that at the moment. I haven't changed pullbacks, yes, but I haven't changed on the longer term where we've got the Santa rally coming from October. It's all going to be the same. The markets are just being pumped to the upside, and they're going to continue that way for some time. So in the German DAX, this one not making much progress though, stuck in a sideways move there. Market breaking to the downside yesterday, which you can see there. If I just widen this out a bit. Trading down to the 78% retracement in the fibs from there to there and then pull back. Also note the market coming off the 50 EMA as well on the overnight. So in the 30-minute charts, the 78% retracement of 50 EMA in the 30-minute chart is there. You can see where we've come back, and again you've got a retracement there and a slight increase in volume. We're oversold. So the market trying to make its way back to the low 2 along with the Dow. And in the S&P 500, we've got an all-time high, but it's not a new one from Friday. The market didn't quite get there. It traded back up to 89% retracement. This all-time high is 6486. So let's just have a look, see what happened. So from this low down to the low here with the green line, you'll see that we traded up to 89% and we're having a bit of a pullback there at the moment. Like I say, that's perfectly fine, perfectly healthy to see that happening at the moment. So the all-time high is at 6486, and the 30-minute chart, again, you'll see the S2 being tested overnight, and then prices moving back towards the low. The key here is to get back above the low and stay above the low. And of course, yesterday the UK was closed, but it didn't stop the electronic futures moving the FT back to the upside to create a new all-time high at 9359, heading for that 9,500 quite comfortably at the moment. It's pure insanity. There's no doubts about what we're seeing, but that's what the markets are doing. And if you want to trade successfully, you have to trade with what the market's doing. At the moment, it's moving to the upside. Yesterday's market action has been picked up here overnight, where the market took off yesterday in the electronic session there as well. So have a look at the US dollar. And in the US dollar yesterday, sneaky move to the upside there. But overnight the dollar sort of weakening a bit, but we're in a bit of a sideways move there now, aren't we? We're just treading water, and again they're going to try and support the dollar as much as they can until Powell cuts rates, and that will send the dollar to the downside. So we'll look at the metals for yesterday as well. And at the moment, silver is holding quite nicely, moved up strongly on Friday with those dovish comments. Yesterday saw a bit of a pullback, but overnight prices are moving back to the upside. We've got to get above 39.51. 30-minute chart there, you can see that overnight they were trying to sell the market in Asia with futures contracts to bring it down a bit. Then all of a sudden, thank you very much, we'll buy at this level, and the market's been brought back above the close and the low of yesterday. Meanwhile, gold, it's reaching that point in its seasonality where it is likely to move back to the upside and continue what it started earlier on in the year with that massive move of around $500 per ounce. If we have a look at a weekly chart, you'll see it. So there was the move, and over the last few months we've just been consolidating, ready for the next move to the upside. So 30-minute chart, again, you can see the same thing. The buyers came in overnight and have moved the market to the upside. We need to get back above yesterday's high in order to continue this to the upside there. Let's have a look at the gold-silver ratio. And in the gold-silver ratio, yesterday, gold being supported a bit more than silver, but overnight has been a change of plan here, with silver moving percentage-wise better than gold. Right, I haven't got any recording for yesterday, so have a look at what's happening overnight before we finish, and you'll see there that the German DAX is heading back above that S2 level, heading back to the low of yesterday, which you can see there as well. So in an attempt to do this, it will need to take out the 200 MA to get to the low there. Okay, so following the dovish comments from Powell at the Jackson Hole Symposium on Friday, a bit of a pullback yesterday, market settling down nicely. It needs to get back above the low in all of these markets that we've looked at, and hopefully then see further price rises. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.